All right, so let's take a look here. Pre-market analysis across the board. First and foremost, I've got Caterpillar. Now remember, what I've done here is I've got my DSR indicators applied. So I've taken the swing ID. I've got internal strength. I've got DSR applied 2 times. So the DSR major right here, lawn green, and this is a 2-day. Let's take a look at the other one. Right here. Okay, so DSR major and minor. DSR minor I'm going to set to black for resistance. We're going to set to blue for support. Okay, so those of you that want to look at higher time frames specifically, let's go knock this out real quickly. Support color is going to be blue down here. And we know that this is a DSR minor. And again, the way I normally set the dynamic support resistance levels up is this. I use a DSR minor that is 2 times the chart time frame, or what I call the trading time frame. So you can see right here, Caterpillar, this is a daily bar. 2 times the daily is 2 days. Then the other one is 4 to 5 times. I go to a 5 time because obviously this is a weekly time frame. So if I'm on a daily bar, 5 days per week, then basically I'm pulling in the weekly DSR levels, and I'm going to show these in red and green on my daily chart. I'm going to change the colors here. I'm colorblind. I prefer more, well, not preferred, I need more difference in the color there. ATR right here set to 7. I'm going to move this to 5. On my higher time frame, I've got the IS over applied, basics. Now on the dailies, you can enable that sound alert. That sound alert will let you know, obviously, when you get those criteria met. And in future trainings, I'll show you how to build this out with the MSA, the Systems Analyzer. All right, so we'll use that. I've got the swing ID set up. I've got my swing majors. Now, we typically look at a 13 and a 3. Okay, so I'm going to take my 3 period right here on the swings. We can apply this a second time and then look at swing majors set to 13. Again, spend a lot of time in the Fibonacci sequence there. So there's the result right there, gang. Now remember, in NinjaTrader, my DSR levels, dynamic support and resistance levels, are drawn based on the swing highs. Then we look left and right for significance as far as market structure. That's what builds the height of the levels. Sometimes you'll see down here we do have the DSR majors in green and the DSR minors in yellow. So this tells me that I've got a 2-day swing and significant level here, as well as a 5-day. And you can see right here for all of May, June, all the way through 2013, our Caterpillar had a beautiful base down there at the $82 level. And then we started to firm up here and just traded sideways. So we're just constantly buying the calls here if you trade options, buying puts here, buying calls here, buying puts here, and just trading this beautiful little $6 range all year long, and literally go 8 for 8. 8 winners out of 8 trades in the sideways condition. Then finally, we look at the short entry here. The market rallies to a new structure high. Now again, I want to show you all the way back to lesson number 1. If price breaks above and closes above, then there's the new structure high. What's the anticipated next move? New structure high followed by the anticipated higher low. Where might that higher low exist? Look left. Previous resistance, spike high resistance, resistance, anticipated support. And you'll note my fib dots right here, the volatility measurement, comes in right at that level. We pull right back down to it, and the market then rallies and puts in another double top before heading to new structure highs. So all markets go through this. The question is, A, how long will they stay? B, what's going to happen after we break out? It wasn't a question of if it would take out the resistance or the support levels, just when, and then what do we do next? All right, so now Caterpillar's taken off. Initially bought puts right there as we tested that 100 level. Now you can see we've made these massive new structure highs. Now I had a couple of questions about how to use the IS over indicator. So again, what we'll do here is come in and just take a look at internal strength. And by definition, when I get a turning point and a black tip that occur on 2 consecutive candles, so let's get our definitions down. We have a 2-bar cluster, or just a flat cluster 2. That means that these signals cluster together in 2 bars. And the turning point always occurs first, and the black tip occurs second. There will be occasions where both criteria are met on the same bar. So the turning point and the black tip will occur on the same bar. And those are going to turn into V tops and V bottoms. A cluster 3 means that obviously these 2 things occur within 3 bars. So as we take a look right here, there is the classic 2-bar cluster. So by definition, the turning point occurs on bar 1, on bar 2, the black tip occurs. When those coincide with an extreme reading on the RSI, if I'm long when this occurs, then I want to consider exiting my position, or B, trailing stops more aggressively. And again, we tend to use our volatility right here, the fib dots indicator, for trail stops. Okay, if I'm flat the market, then I use this as a qualified trading signal. Then I want to note where's price relative to. So here you see Caterpillar just drove into new structure highs. So as I look left on this chart, I've got nothing to draw from. I've got no reason that other traders might look at this area and say, okay, let's look at getting short. As you look right here, you'll note I got the turning point. 2, 3, 4, 5 bars later, I got the black tip. So this clearly would not be a cluster 2 or a cluster 3. This would be a cluster 5 signal. So then what I did was I started going back. And again, those of you that are on trial with us, be sure that you start to recognize these tendencies. Here is a 2-bar cluster. There's the turning point, followed immediately the next bar by a black tip. Here's a turning point black tip in the same candle. Here's a turning point black tip on a 2-bar cluster. And again, all I just consistently do is I say, okay, what tends to happen next? Tends to happen next. Remember, we talked about 2 different types of tendencies. Number 1, indicator-based. Number 2, price. And this would just be basic market structure. So this would be our double bottoms, double tops, and so on. Indicators, most of them are derived from price, but we can use these for predictive thought processes as well. Okay? So we got the turning point black tip. If we take a look at this particular trade, now what I'll do is I'm going to right-click right here, come down to templates, and I'm going to save this template as DST underscore DSR underscore daily. All right, that done, I'm going to come back in here, indicators. Now let's go in and let's remove some stuff. So I'm going to leave my swings. I'm going to remove my DSR, 1 and 2. ATR I can leave on. The fib dots I can leave on. I'm going to leave on the IS over. Now I can focus just on where I get cluster 2s and cluster 3s. Okay, so at this point right here, turning point black tip, where I got a cluster 2. Previously we saw that this level right here had a major DSR support level at it. So again, as this market declines into this region, I want to see some type of a momentum or a strength indicator telling me, hey, we've hit an extreme level here. So short term or long term, the bearish momentum behind this drive to new lows may be waning. Thus, I'm going to look for a turning point. That's why I named it the turning point indicator. So if I, again, here's the if-then thought process. When that occurs at a DSR support zone, I say RSI is oversold, SOS1. Turning point, SOS2. Immediately followed by a black tip, SOS3. What if I just bought the open of the next bar, put a stop below the swing low right here, so we'll go right there. What would my risk be? In Caterpillar, that risk is $3.50. 350 happens to be just about 2 times the average true range right there. So the default position is I'm going to risk 2 ATR, risk 2 times the average true range, and that is always set to 7 for me unless otherwise designated. And then reward number 1, 2 times ATR, or in this case, we just call it equidistant. So if my ATR at this time was 1.4 or $1.40 of movement in this stock, 2 times 140 is 280. So I immediately place a $2.80 stop, and that stop would put me right about here. I then recognize immediately as I look left, well, I don't want to put my stop here. The market could come back down, retest that swing low in structure, stop me out, and then take off. Doesn't make any sense. So I immediately go 2 ATR, then I drop in my horizontal line, and then I look left. Write it down, traders. Write it down. Look left. Oh, got to move my stop. See the swing low here and the swing low there? I got to respect that market structure. So my stop would have gone slightly lower. Then the other thing I look at is, obviously, where's the 2 ATR target? So from the open right here, we had a move of $1.84 against us, about 140% ATR, before we had a beautiful direction move for us. So a retest of our DSR resistance zones that we're resting right here easily pays the scalping target. So again, that's a 1-to-1 risk-reward ratio. And those of you that are familiar with the expectancy formula, if we risk 1 to make 1, whatever the size of that unit is, $22 in a stock, $4 in a stock, 18 ticks in crude oil, does not matter. If we have a 55% win ratio at a 1-to-1 risk-reward ratio, we're going to be able to make money and probably cover costs, which are slippage and commissions. So we're going to be up slightly. If we go to 60, 62% win ratio with that same 1-to-1 scenario, we're making great money. We can win 40% of our trades, but our average winners have to be larger than our average losers, about 1.4 to 1. And I'll train on the risk-reward ratio and that formula tomorrow. All right, so not only do we see that, but the market continues to rally. So the point at where we peak from our entry, from the buy signal right here, that's the new structure high. If I trailed my stops below the fib dots here, this is the highest high the market pushed to before my trail stops were taken out. So this is the maximum favorable excursion on this trading signal. That maximum favorable excursion, let's just call it $7. At the time of the trade, we're going to pull in our strategy window here, data box, and we'll see here at the time that the signal occurred on the black tip, that day my ATR was 123. Okay? So very, very simple. 123 times 4 is 480. Times 5 puts us right here. So we had a 5 ATR move before we had a 2 ATR retracement where we would have been stopped out. Same thing here. Turning point, black tip. What if I sold the open of the next bar right there? What was the maximum favorable excursion from entry? And on my black tip bar, you see the ATR was 152. 2 times that ATR is $3. Did the market move $3 in my favor? Yes, it did. It went $4.60 in my favor. From the point of entry right here, did the position move against me at all? It did not. So this is a no-pain train. If I sold the next bar at market and placed a 2 ATR stop and a 2 ATR target, would I have made money? Yes. Same result here, yes. And so on. Okay, so over here we just had a turning point black tip. So we had a cluster 2 sell. The turning point occurs first, the black tip occurs second. On the black tip, my ATR was 168. So if I sell the next bar at market, then I'm short from the open, let's call it 101 for easy math. So 101 plus 168 squared, $1.70 is $3.40. So that'd be 104.40 right here, So the protective stops would be above the current swing high. We'd be short from right there, and we'd be looking for a move in our favor. There we go. That's exactly right. Now, this short entry right here I like because we'd put in a double top in price action. This one right here on the right side, you can see that we're in new territory as far as new highs. So really, really critical stuff. Yeah, so I wanted to go through that cluster too. Now let's employ the same thought process, and we'll just take a look at a different chart. So here we are, real-time intraday. Okay, so you see right here, S&P top right-hand side, we're banging right against structure resistance. So my 1500 tick chart right here shows that exact same trading signal. So as the market's declining right here, first question, gang, is my RSI oversold? Everybody has to say yes. Then I get the turning point black tip right here, back to back. So I go SOS 1, SOS 2, SOS 3. If I buy the next bar market, then what happens? So we get long right here. We see a move of 7 S&P points. This is a natural area for me to get flat. Why? Because we're banging right into my DSR resistance zone. 7 points is $350 in the S&P. Now you see that we're overbought on the first test. Then we make a retest right here. It's an 18 to 30 bar pattern, a beautiful double top, and there's the qualified sell on the right side. So we'd be short from that 575 to 550 handle, looking for the market to pull back. Where's my natural next target? Makes total sense that we'd look for the market to come back into the 59s, retest this support level, this support level. This trade right here, that short entry is counter to the underlying trend. This buy signal right here for the 7-point winner is with the underlying trend. This sell signal right here is counter to the trend. Okay, so a quick look visually, and you can see that we have been in a bull continuation pattern. So we want to be sellers against 66 until we're proven wrong. We want to be buyers against 58.59 until we're proven wrong. If I sell them here and we make a new structure high, I know exactly what I want to do next. And we go right back to day one and the very, very simple yet powerful, if price moves to a new structure high, then what do I look for next? The anticipated higher low. Next question, your brain says, where do you think that's going to happen, Todd? Well, look left. Previous structure resistance is anticipated structure support when broken. Same thing here. If the market comes back down and I get a qualified signal at 58.59, guess what I do? I buy them. If the market rallies back up here, I'm going to cover part and then look for the extended move here. If I buy them down here, is there a chance the market could go lower? Absolutely. Every new trade I enter, regardless of the outcome of the trade prior, is a 50-50 proposition. There's a 50% probability or chance it's going to be a winner or a loser. What if you've had 8 winners in a row prior to that? No difference. If I flip a coin 197 times, and most recently I've had 14 winners in a row, on the next flip it's still a 50-50 chance that I'm going to get heads or tails. Okay? So if I buy them right here and the market goes lower, I get stopped out, then what? Oh, I got stopped out. No. New structure low, go back to the basics. New structure low, what's the next thing that'll happen? Anticipated lower high. Where might that lower high exist? Look left. Support. Once broken, anticipated resistance. Same thing every time, gang. The basics, the foundation, the most important stuff. Well, what about when we're between here, Todd? Well, this is no man's land. There's nothing to do. If my trading plan says I trade DSR levels and I only trade a retest, I wouldn't sell them here, but I absolutely sell them here. This is the retest of that level. This is a perfect 18 to 30 bar pattern. From the swing high right here, we pull back for 4 to 6 bars, back up 4 to 6. From the swing high here, we pull back 8 bars, back up 11 bars. Perfect. So same thing over and over and over. Daily bar doesn't matter. Weekly bar doesn't matter. Repetition's the mother of skill. All your bad habits are the result of repetition. All your good habits are the result of repetition. During this period, you have to break the bad habits. You have to install new habits over and out. And that's exactly what we're doing here in the live room. That's exactly what we do through the training videos. Repetition, repetition, repetition. What do I see? What does it mean? What do I do? What do I see? What does it mean? What do I do? Over and over and over until we arrive at a signal. The signal is a point of entry, followed by the initial stop loss, followed by trade management, position management. How many contracts do I trade? Where is my initial stop loss placed? How do I exit the position? Over and over and over. And again, gang, you got to test before you trade. You got to test before you trade. Test the signal. Look at the consistency over and over and over. All right, so top right-hand side, 610 tick chart. We'll watch this right here with the range trader. Bottom right, crude oil, 150 tick. Now we'll turn it over and get right into the live stuff.